reiterate some of the biggest things that we'll talk about on the Q2 macro themes call, which is quite simply to be long real growth. Okay, so there's a series of ideas we've given you there, and to be short from this point, reflation. So that includes stocks like Caterpillar, but not Caterpillar when it's down, Caterpillar when it is signaling immediate term trade overbought after a Goldman upgrade. Today, we get in the S&P 500, we get another higher low. So higher low, 2340. Higher low, because I know a lot of people have been focused on lower highs. Higher lows are bullish, lower highs are bearish. So what are you, bearish or bullish? I just sell at the top end of the range no matter what, and I'm buying and covering at the low end of the range. So be agnostic. Don't have all these different biases in your head. I had one in particular, Boston Expat, I believe he's his Twitter handle, power user of Hedgeye. He said, right at 11 or 12 o'clock yesterday, he said, everything in my body and my bones and my emotions says that I don't want to sell. This market's straight up today, but I will because the process told me to. Thank you. Thank you. And this is a guy that, 3 to 6 months ago when he joined, he was confused about the process. He didn't like selling high, didn't like buying and covering low. This is exactly what you need to do. You got to just take it out. Just take all that stuff out. Just feel it. Listen to Joel Osteen if you really want to feel it. It's all good. Just sell the top end of the range, damn it. This is 2375 is now top end of the range. If you sold everything north of 2375 yesterday, you're very happy this morning with this process. So again, we're going to rinse and repeat it. We're going to tell you how to do it. We're going to give you the ranges every single day. And we're not going to get anchored on why this is less bullish or why this is more bullish. Because that's accurate. A higher low and a lower high. Lower high, less bullish. Higher low, more bullish. What is it? We'll see for the jobs report tomorrow.
He's asking, if you were looking to get into one position longer term, 6 months or more, today, what would that be?
Short long-term bonds. Mm-hmm. That would be, if you haven't shorted anything and you like to short for the long term, you like that I picked the short, don't you?
Short for the long term.
I mean, why not short selling for the long term? I mean, if you believe in a breakout in growth that's intermediate to long term, you would short that. A great long-term position would be short long-term bonds. Soft and hard data is accelerating, okay? In fact, on the Q2 macro themes deck, we have 76 slides. 76. 76 slides on why real growth is going to accelerate in the U.S. Not every slide's about that, but you get my point. We're not including any soft data points. Just because we can't. Hard data is accelerating in rate of change terms. And we're going to start to, by the way, once we release the macro deck, we'll show you, as we always do throughout the second quarter, we'll be giving you plenty of these slides just to reinforce what's actually happening. So yes, I agree 100% on Old Wall Radio, Old Wall TV, Old Wall Journal, the old Wall Street Journal. You are reading an increasing amount of bullshit when it comes to a lack of data dependence and a lack of actual data to support any political opinion. An opinion politically is like an opinion on valuation. It's an opinion. Rate of change data is a fact. It's either going up or it's going down.